traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I am going to give you my 2 cents worth here before we get into the nitty-gritty of these charts. This is basically something that I still don't understand. This is about credit default swaps. In 2005, this was a year after I met Tom Hugard, I was at Canary Wharf giving a speech to 10 bankers from all over the world. I'd been invited there by a bank to speak with these two dudes, or all these folks, for 2 days live trading. And my agreement with the bank was I got 10% of the money that I made during those 2 days. And they paid all the expenses, my flight over, and then my room, but any profit had to be from the account, and I did pretty good for those 10 days. But Tom Hugard came over to spend some time with, come over, he was living in London. He got on the tube and came over to see me. Anyway, we went to dinner with the president of one of the banks, and he explained to us about credit default swaps, which to me was a very sophisticated way of borrowing money and keeping it off the books. That's the way I understood it. But that's part of the problem what's going on. I really don't understand it. This is the definition right out of Google. And I just wanted to let you know that when you hear that, go look at it, and you'll see that it's not an easy thing to understand. It's not easy for me, folks. You know, I'm an upside down ABCD trader. So that's what we're sort of paying attention to. But the next one I want to bring, this is really important, folks. So please listen to me now. This is no BS. I know it's hard to believe, but it is the absolute truth. Okay, this is from our esteemed United States Secretary of the Treasury, Janet Yellen, who used to be the chairman of the Federal Reserve. And I want you to realize here, I'm going to read this to you. And this says the U.S. Treasury Secretary, Janet Yellen, said on Sunday she was closely working with banking regulators to respond to collapse of Silicon Valley Bank and protect depositors that a major bailout has not been considered. First of all, she was closely in contact because they were calling her, telling her what to do. She said, let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out. And the reforms that have been put in place means we're not going to do that again, she told CBS News. She's absolutely correct, because you know who's going to be doing the bailing out, folks? You and me, because the Dodd-Frank bill brought to us by 2014 by President Barack Obama allows them to go into your savings account and take what they need to cover anything. And if you think that's wrong, it's in all the major countries, folks. It's in Australia, New Zealand, Japan, not in China, but also in, let me see, Japan, UK, Japan, I can't think of the other ones, but all the major ones have that in there. And if you don't believe me, go look at the Dodd-Frank bill and take a look at it. Will that ever happen? I don't know, but it's in there if they want to do it. Now, we've had some banks, as you can see here. If you remember, about 5 or 6 weeks ago, we had Jim Bartleone as our guest, and he showed the beautiful Gartley pattern on the weekly NASDAQ banking index, and it was a 382 ABCD, just screaming, and we've been bearish ever since. And you can see these markets have been going down quite a bit. But folks, they're very, very tradable. Let me just show you what we were looking at. You remember the magical number that I talked about on Friday, which was 39.28. I said if we go below that, I said we're going to have a big down day on Monday. Let me just show you what happened today, folks. And I know and I did this ahead of time because you'll be able to see it, because it was actually a double bottom. Let me get this up here. This is just a 2-minute chart of the E-mini S&P from last night when it had the huge rally. Remember, we went down and we rallied all the way up to 39.69. And then from there, we went all the way down to 39.30. Let's try that again, Larry. 38.30, 130 handles. You see that perfect A, B, C, D right there? That's on the 2-minute chart. Well, 2-minute charts, you put enough of them together and you're going to get a longer term chart. So all we have to do now is to take a look at the SPX, and you're going to be able to see an absolute 100% perfect A, B, C, D pattern right on the money. And folks, we sent stuff out last night saying sort of be prepared for this, because this is what's really happened. That big rally that we had last night of 100 handles, totally by surprise. All it did was go to the exact 50% retracement of the previous high, to the tick. 39.65. Well, it went to 39.70. 5 points and something that big. And it didn't stay there for a half a second. So that's why I'm a pattern recognition swing trader, folks. I don't understand a lot of it. You know why? I don't need to understand it. All I do is watch the price action and get it. Now here's my skinny on what I think is happening in the world right now. We have started what history is going to tell us. This is going to be one of the most major things that's happened to us in this decade, from 2020 to 2030. This is going to be one of the most major things that has ever happened to us. Why do I think this? And let me try to explain to you in one chart so that you'll be able to try to understand what we're seeing here. This, hold on one second, folks. Let me get this. If you remember, folks, this was the bond chart on Friday. By the way, the VIX was up 16% at one time, I heard, but that's just the beginning here. Okay, there is the VIX, or this is the 3 standard deviations, folks. That is extremely, extremely bullish. So that's the thing that you should be watching when you have financial problems, because they go in and look at the flight to quality on the treasury bonds. All the worlds do that. That's called running to sovereign debt, because that is supposedly, well, not supposedly, it's far, far better than junk bonds or any of the other things you could put your money in. So we had that big run up and went right up to the 78% retracement of the February 6th high. However, because we were watching it so very, very closely, what we were watching here is this right here. So bear with me. There's 3 charts that you have to look at. After this thing last night, here's what occurred. And I watched it all night long, folks. So I was there. I slept for 2 hours. Anyway, we went right up to the 1.27, and we came down almost to within a few pips of the 382 of the low that we made back here when we had that 3 drive to the bottom pattern. Okay, went right to the 382, and guess what happened then, folks? This is when the market was having a huge rally. Okay, as it came down here. This is when we got down to this level here. We were about 39.60 in the S&P. Okay, and that was a 50% retracement of the previous day. That big range on Friday, it retrieved 50% of it. That's how quickly it did. How close did it come? The number was 39.65. The high was 39.7. 5 points. $250 on something that trades for $160,000. So that's why these things are so very, very important. But what happened next is really what's really important, because this is where the real rally happened. And I'll get it up here right now.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kekstad's Tiger Forex Report. Teddy Kekstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're talking about the bond market and the timing of the bond market and things that were going on. I posted it here in the room so you'd be able to see it. What happened to it? Shut the front door and raise the rent. Give me a break here, folks. I'll have it up here in just a second. There it is right here. This is, to me, this is the most important thing that I'm going to be telling you today, besides thank you for joining us. Hold on right here. You'll be able to see it. This is a chart here showing the action here of what's been going on here for the past few days. You'll notice here that we have, this was the move early last night. You see we got up to this level. Then we backed off. This was the 382 right in here. We had a really nice trade here that ended up being break even. Then it pulled back right here to the 382. Then it shot up. And since that time, this is when the market started to rally. The bonds have actually started to break down. So the first thing you want to do is to measure from this low to that high and watch the 382 retracement, because if we start breaking down really hard, this is telling you that, hey, you know, the pressure's off, and by golly, this stock, we could have some more of a rally. So that's all I'm doing. I'm sending these out. I sent, believe it or not, folks, I sent 6 videos out last night trying to describe what was going on. We had everything right, with the exception that we were not long gold. And believe it or not, folks, we sold gold at 1873 on Friday, right on the close. And I said that day, and I said it again for early Sunday night, I said, if this thing put a stop in at 1877, because if we get above that, it's off to the races, and we're trading at 1917 right now. I didn't say reverse and go long because I don't do that kind of thing, but I'm going to have to start. Anyway, that's basically what's happened to this. So I'm watching all of these because it's all money moving around. We had a really, really nice trade in the dollar yen. We shorted the dollar against the yen. That had a really nice move. I'll show the crude oil one in just a minute, but I want to go through these bonds to show you that's what I'm watching. That's where the key to this is. This is the big market, folks. This is many times bigger than the stock market, believe me. And that's, the Fed is in there too, but boy, there's a lot of other people are in there too. You can play games with that E-mini S&P because it's a small one, especially in early evening on a Sunday. Heck, there's hardly anything there. You could push that thing quite a bit, and which they did. Instead of opening lower, it opens 40 higher. people say, what happened? I said, hey, nothing's really changed. This game's not over, and it's not over, folks. This is just getting started. You remember this was Thursday. I forget I thought it was Jim Bartolioni sent me this chart. It was on the stock of, what do they call that thing? It's an ETF deal or something like that. I can't remember. It's KRE. Where did I put it? Here it is right here. This is a regional bank. Okay, now this is where we were. You can see the gap down. You can see Wednesday, Thursday, Friday, and today is on here. So we'll get it up here so we can take a look at it. We were looking at this on Wednesday, if you recall. This is when we really started to break down, was right there. And there's Friday, and then here's Monday. So there's what we have. All we're going to do now is we're going to get a little rally in here, folks. Okay? Now, here's something that you have to do. You have to listen to the old cowboy here, because this is really important. And you know what? I got to be real careful here. Let's put it this way. You gotta have a little bit of cash on hand just in case something squirrely happens, like the bank. The banks are not going to close. They might get hurt a bit, but you got to have enough money to live off of for a few weeks, maybe a month, 2 months, 3 months, 6 months, whatever you feel comfortable with. Frankly, I'm looking at 3 years. But anyway, let's take a look here if something goes wrong. All right, now we already know this thing's been going down for well over a year. Now everybody understands it, right? Okay, now the problem is this. If you wake up some morning, and I thought maybe this would be the one, and with the markets acting the way that it did, everything's just perfect. I mean, it hit the exact numbers, having a nice rally. What you don't want to have happen here is to see, and they were expecting the Dow Jones to possibly open limit down today, believe it or not. That's where the Fed came in and did what they did. And it wasn't just our Fed. It was with the Central Bank of London, Japan, all of them were in there, okay? But then the market gave a lot of it back, okay? That absorbing was upselling. So now we're backing and filling with all the people that are buying and selling. Nothing's really changed at all from overnight, really. Those banks, we've had 2 other banks go under today, but what you have to worry about, and it hasn't happened in the United States before since 1929, and it was actually 32 was the bottom of the market. And I will tell you, this is an absolute true story. My grandfather had about $4,000 in the Clinton Bank in Clinton, Indiana, and they closed the bank. Nobody could get their money, but unfortunately, everybody knew where the banker lived, and my grandfather went over there and made him an offer he couldn't refuse to get his $4,000 out. And by golly, my grandfather got that $4,000 out, and he started a restaurant with it and was able to support the family all during the Depression. So something like that might happen. So have some food money, be able to buy some Snickers bars or whatever it happens to be. Just be real careful in here, folks. We haven't had anything like this happen in a very long time. That doesn't mean that it can't happen, but we're seeing the first signs of it right now. And I don't, first of all, I don't think we have to worry about the market making new highs, but we could see a really good rally here. Remember, we had a high up here of around 42 and change. We could do a 61% retracement of that with some, really good news coming in and all that kind of stuff. But I don't know. But all I know is, watch the patterns unfold. Last night when the market rallied, I told the folks on the video, I said, look, it's going to rally up here somewhere. And I said, wait for a short-term pattern. And at that time, the short-term pattern, a beautiful ABCD, 3 drive to a top pattern on the 10-minute chart happened at 39.65. And I said, this is it, and you got to risk 20 points nowadays, but went all the way down. And this is where you can see where we thought the low was coming in, another ABCD. You don't see any oscillators or anything like that on my chart. I don't know what the heck they mean. All I know is I know what that price bar means. And that's what is really important, okay? Tom Hugard sent me a little note this morning. He said, just because these markets are moving like this doesn't mean it's easy to trade. And I said, yep, you're absolutely true. They're not easy to trade because the people come in, and we've got a lot of people have a great deal of interest in keeping this thing alive, BlackRock, Vanguard, and State Street. So pay close attention. But we should get, and this is my fondest hope, and if we do get this, it's Merry Christmas, Happy New Year for 10 years in a row. If we get a 382 rally in this banking index thing, we don't trade that, but we'll be using that as a guideline to see what's going on. But We did make a perfect ABCD today in the S&P cash that I posted earlier. It was absolutely perfect. So you want to watch the 382 off of that, off of both the BC leg and then also the top up here that we had, way back here in December. So anyway, let's just let me double check to make sure I get that right. It was the high in February when we hit 4,200. See, the 382 back on that would take us all the way up to, oh my gosh, believe it or not, it would only take us back to the high of the day, 39.60. So this is going to be really interesting these next few days. And don't believe the government, folks. I love them, but they don't lie to you. They just don't tell you the total truth. That's the key.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I'm going to get a little bit information here. Here was the beautiful pattern that we had here on Friday. When I did this trade right on the close, and I thought about it, I said, uh-oh. I said I probably should have waited, and I did really be explicit about it, that on Sunday night they put the stop at 1877, and they probably got filled. It got filled a little bit higher than 1879, so it was $2 off the low. That was the low, and the high today so far, we've already made new highs. We're already above this at 19. I don't. When the last time I saw it was close to 1920, I think is what it was. What was it? No, we only got to 1918. 1916 was the 61% retracement of the whole thing. So that's something that we have to watch because, you know, this is still in a longer-term downtrend, but this is basically setting right there at the 61% retracement. So the reason why, folks, is when you're wrong, and these patterns fail, sometimes they can really be very nasty. Remember, we missed this high by $2, and that was a $20,000 move in a matter of a very, very short time. So, okay, let's move on to a couple other things that I wanted to mention. What I do is when I see some of these real strong trending markets, folks, those of you we had a really, really good response for the day trading thing, but this is, I learned so much just by watching the markets and how Tom Hugard trades and stuff like that. And, he's not much into the pattern recognition stuff that I am, but he's looking at volatility and he's looking at, wide ranging bars and things like that. But I wanted to show you a setup that we saw coming last night ahead of time. It's not, I'm showing you the charts, but I wanted to show you what actually happened, because this is how I determine trend. Now you notice from the low here to the high here, okay, that is a 382 pullback. But then you make a higher high, and you make a nice ABCD, and it comes in. There's your low. So you had a really nice move here, and then you had a really nice move here. And what I said was in the video, I said, look, if we get below this level right here now, this is telling you that this trend has changed. And what you want to do is to go down to your 5 or 10 minute chart and look for a 382 retracement. Now, I'm just saying, because these markets repeat over and over again. We see it all the time. So all I wanted to tell you is that once this broke this level, we didn't know where it was going to go from there, but I said, watch for the first 382 retracement, because that tells you, where the, where the next move should be. So what I did was, since it happened that way, I wanted to bring it up and I show you all the winners. If I had to show you the losers, we'd be here for about 6 or 8 more weeks. But here is what happened last night. And this took just about 2 hours to complete, but it did exactly what we wanted it to do. And this was a really, really low-risk trade. And you can see here, we dropped $3 a barrel, folks. You're risking about $600, and it made $3,000. And then look, it started up. Okay, of course, it stopped it here, backed off, and went a little bit higher. But that's what we're doing. When you're doing a short-term pattern like this, you got to look at the prices and the action on the. Look at the. See, this takes an hour to form, but look, you got higher bottoms. This is for the first time in a long time. There's your 382 retracement right there. And that's what we're looking for when we're doing it. What we're seeing here, just like this, is what we were watching in the S&P, but we were watching it on the hourly chart. Right there is where we were setting right at the 50% retracement of the big range at 39.65. The high was 39.70, and away it went to the downside. So that's some of the things that we're looking at. Now we're gonna show you a couple other things. I showed you some of these other markets, but take a look here. This is the FTSE, folks. Get a free trip across the pond right now, and they'll be looking at. Looks like, there we go. Looks like I'm going to be in Spain for about a month sometime during the summer, during July. Our son-in-law has had a sabbatical at the big university there. He's a doctor, and they're taking the family over. So guess who they asked to babysit? And we love it. Anyway, there's what we hit today so far, right at the 382, the low right here. That gave the little bit of the rally that we're looking at right now. And then if we take a look at also the DAX, which is a real interesting one here. I wanted to bring it up so you can see the daily DAX, because we did the same thing here. Hold on, and I will get it up here to let you see it, because this is Germany, and they didn't seem too blasé about it. But I wanted to show you, you'll notice the pattern right here at this level right here, the 382, okay? Now what I did was, because I know Tom is trading this, and I wanted to alert him to see if there was anything in that would make it, really, really viable for him to, go into it. So all I did was, let me get this up here. Hold on, what did I do with it? Hello, operator. Oh, no. Yep, it's gone. Shut the front door and raise your hand. Oh, got it. Yeah, I can't get them all. Son of a gun, not too good. Not a happy camper on that. doggone it. All right, now I'm going to give you some stuff on the U.S. dollar, because a lot of people think this is the flying Walindo here in the U.S. dollar, that the dollar has topped up into here, which is possible because this was a major 78%. Oh, I got to put the chart up. It's what happens, called lack of sleep. Okay, get this up here. And here we go. All right, this is the dollar index. This is from Charles Kimball of Kimball Charts. It says right there is what it is. Anyway, there's the number that we're looking at right here. Now, we've backed off quite a bit from that level. He thinks that we're getting ready to break really hard to the downside, and he certainly could do that. What he's doing here, he's showing you the time frames of 11 years. You see, we're 11 years into it. Right here, you see this here back in 2010 or 11, I think it was. Guess who coined the phrase King Dollar? It was none other than our fearless leader, Tom O'Brien, when it was trading at 72. And, of course, it went to 114 and is still going up as far as we know. But anyway, that's one of the things he's looking at. Now, long-term, that doesn't mean very much to me, because if I look at a long-term chart, the first thing I have to ask myself is, how much do I have to risk? And that's the key to what I'm trying to look at on these darn things, is how much am I going to have to risk, when I do some of these things. The next one that he's looking at here is this dollar on the weekly. Here's what he's saying, and it is certainly a possibility. And, if that's the case, gold is getting ready to put in a one heck of a move, and that was his next thing that he wanted to talk about, because these are things that we've got to really pay attention to. Here's what happened here. You see, this was that high in the dollar. That was 78% of this move right here, okay? Then we had this move, and this is the rally that we've just had in the dollar. This is when we had that rally in the yen up to that 138. It's 132 now, and we've been short that, so that's been a really good one. But what happens is, if this is the top and we start to roll over, this means the euro, believe it or not, the euro could take off from here, folks, and it's trading at 107. We could see 113 or something in the euro if something like this happens. Why, I don't know, but that means that the U.S. would be in the doghouse, because the dollar would be really getting hit really bad. Now, if that's the case, that means that Treasury bonds and some of these other things are going to get hit also, because they're all interconnected. The problem with looking at them interconnected, folks, is that you got to put a trade on at some point to see whether you're going to, make a bet. And that's all I'm doing, is watching the shorter term pattern to get in, so I don't have to risk very much. I try to be right a little better than 50%, but if you win, your win's going to be at least double or triple what your risk is. And that's what trading is all about.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're going to have a little fun here for a minute. Let's take a look at this and hold up just a minute. Just got to let somebody know that the time has changed and I can't talk right now. Hold on just a second, boys and girls. Let me get this thing up here. Okay, can we get rid of that? And here's what I want to talk to you about. Here's where we were Friday, folks. If you'll remember, I want to bring this up to your attention. Hold on. Hello, operator. Okay, now I'm ready to go. This is the Russell, folks. Remember, the Russell's second largest of the stock indices. You can see the 382 retracements. You can see the 382 retracements now. Now, the one thing that I teach here is ABCD and Fibonacci. That's what I know. The oscillators, indicators don't do so well for me. But anyway, I want to show you what's happened to the Russell. This was at the same time we were making our pattern in the S&P. So if that's the case, the Russell should have been doing pretty much the same thing that the others were doing. Now, all I have to do is to hope, and I hope, and there it is. My goodness, I did something right on the first time. Shut the front door and raise the rent, Billy Ray. Looking good, feeling good, Lewis. Okay, there's where we were Friday, okay? Look what happened. Bada bing, bada boom, bada bing. You see that perfect ABCD? That was a low today. That's a perfect ABCD from Friday, folks. There was the rally in the middle of the night, all right? And down she comes right here to a perfect bottom. And the 382 so far from the high we made back on Friday was only just a little off. So watch this. If we start to get above here, then we got a chance for something other. But if we start back down again, we're going to go to drive 1, drive 2, and drive 3. Now, I have to answer something because I have someone that keeps an eye on news that sometimes will make an event here, and we want to see what's going on. But that is, oh dear, it's just stuff that they're blaming the depositors for putting the money in to the bank. Who knows? Folks, just pay attention to what they say because it's only partly true. It's not always false information, but it's partial truth. And those are the kinds that really give you, the willies, because you don't know what is going to be happening that makes it, good or bad. That's one thing you don't want to do. Hold on, I've got to do a technical thing, because if I don't, I'm going to lose something, and I'm not going to be happy if I lose that. So hold on just a second. I do want to, and because I want to repeat some of this stuff for you folks, because to me it's important. I've lived through these before, and we're going to come out of it okay. But by God, let's make a few bucks. That's the whole key to what we're doing here, and we're doing okay so far. The trade we lost in the gold, I said it was going to go up, and I didn't even chase it. In fact, I actually shorted it the second time after we'd had the big moves in the crude oil and the S&P and stuff. So I took a nibble on the gold and lost on that. But we had big trades in the Japanese yen, long the yen versus the dollar that picked up about $1,500, and so those are the kind you like to see happening. Now, just to give you an example how wild things were last night, let me just give you. I'm going to just show you one of these trades that we were looking at last night. Now, this is just a 4-minute trade in gold. Now, it doesn't make any difference what the time frame is because these patterns are everywhere. This is when we made our early morning high. That was at 1899.5. Okay, there was the pullback right after the open. Okay, we rallied all the way up here. We make a perfect 382 retracement, folks. That's a $1,600 move. That's a big move. And if you look at gold on the shorter time frame, you're going to see that it made a beautiful ABCD pattern. And then I want to show you the losing trade. Hold on one here, just to give it up here so you'll be able to see it really quickly. Hold on, because this is how we learn from our mistakes. We have a nice move down here, okay, and I'm going to sell because this was a strong trend, right? This was a place to cover right there at your 1.618, and so I sold it right here. And look at this. It starts with a $3 profit, and blink your eyes, Larry, because then you were out of it, and it was off to the races all the way up to 1917 so far today. So that's what I try to do, because when you have a loser, you take it off, move on. And like my grandma said, always have 2 quarters in your pocket, because there'll be a pretty girl on the second bus if there's not one on the first breath. You know what I mean? So let's remember that. Now, getting back to what's going on in the news and stuff, my grandfather had a saying that I always remember. He always did this in Italian to tell us, and he had broken English. He spoke several languages. He spoke Italian, French, and Italian, French, and German because he was in the war. But he would say, what it is what it shall be, and what it shall be is what it might be, and what it might be is what it is. So always remember that, folks. Very, very important. So I asked him, what the heck does that mean? He said, don't believe anybody. And do you remember Ronald Reagan, one of my favorite presidents? And he said, trust but verify. And that's what you got to do with these markets, folks. You got to trust them. But you know what the verification is, folks? I'm going to tell you this. Listen, come up to the screen real close, and I'll tell you. It's AB equals CD. If the prices are going up, there's more buyers. If prices are going down, there's more sellers. And that's what you have to remember. That's the key to what you want to do if you want to make a living. If you want to get involved in the fundamentals and why they're doing this and who's doing that and whatever. I mean, okay, that's okay to do that. But, like Reagan said, trust but verify, and that's true. It's very, 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 very important. And remember, you remember in Sun Tzu, The Art of War, he says, don't ever prevent your enemy from making a mistake. Well, you know who your enemy is when you're trading, right? It's that guy in the mirror, the 9-inch cycle between the left and the right ear. That's your enemy. So you got to remember, if you make a mistake, that's your enemy. You got to go in and change it. Nobody else is going to change it for you. Nobody else can be, believing it. I'm going to show one other pattern here that we did last night. It was a nice trade, break even, had $600 in it at one time, but this was the bond trade. And we'd bought it pretty good, and we had a nice run in the bonds. But you see here, we had a really nice break here. Okay, remember, this was the exact 78% on the daily right there at 1320 or 131.20. We came down here, we had this nice move here, and we sold it there. It came to here, and it rallied up very quickly, took us out at break even, and then off it went and went all the way up to that big move that we looked at a little bit early when we got to 132.10. So that's what we're watching when we're watching some of these things. The difference between the hourly chart and the 5-minute charts, the only difference is the amount of volatility. The patterns are still there. Mandelbrot proved that in his books about fractal analysis, and that's pretty much we want to be going. Al says it's too late to call in today, folks. Maybe tomorrow. Hopefully, Tim Boss is back in business, baby. Tim is back in the house. So we'll have him on very shortly. So live every day in an attitude of gratitude and stay with us.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, the thing that I had to put it on pause because I had a call coming in that I had to take, Al, sorry. But John Jameson follows some of the things that are happening in the world to let me know if anything important happened. Nothing really happened of very importance. The thing to watch is the bond market, folks. If the bond market starts to give up, then stocks are going to rally. And if it doesn't, there's a problem out there, boys and girls. We've been saying it for a long time. You saw it in the regional bank stocks. These people have been hurt badly. Do you think that because the government comes out and sways a magic wand that this thing is going to go away? You know, we've seen this before. Remember Lehman Brothers? You remember Bear Stearns? Bear Stearns was $134 and they sold it for $2 a share. That's called a default swap or whatever you want to call it. So maybe they're going to trap me once in a while, but it ain't going to be this time. So stay with me and I'm going to get you through this. I spent a lot of time doing it. I work a little. It's not really work for me. The problem is it's like a giant chess game or poker, whatever you want to pick. It's a lot harder than poker or Major League. But, I do like doing it, and I do send out too much, but it's to try to get you on the right side. Sometimes we're going to be right. Sometimes we're going to be wrong. But we'll be right more than we're wrong, and we'll make more money than we lose money. That's what's been happening, and that's what we're trying to do. We try to catch a good one once in a while, and sometimes we catch a really big one. So that's the main thing. I miss some like I did in the gold. That's the way I knew that Saturday morning when I looked at the chart. I said, "Oh my God, I hope it doesn't open at 2000 or something like that. And of course, it opened at 1877, right where the stop was. And as I watched it go up, I said, why didn't I stop and reverse with that gap up like that? And I didn't. So, but that's it. I don't chase markets. I should sometimes. Actually, I bought some bonds on the way up. I mean, I saw little 382 retracements there that I pointed out to you, but the others I didn't. Hey, we'll see you all tomorrow. Hopefully, I'm going to have Tim Boss as our guest tomorrow. No promises, but live every day in an attitude of gratitude, and may God bless.